Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top 10 stocks to buy in 2020. So I hope you guys enjoy it, and overall, I hope you guys learned something. So now before we actually jump into the episode, if you guys want to get a more detailed description, we're going to start writing out all of our video posts in my blog, Money with Carter, giving a more detailed description. So if you guys need more information about some of these stocks or anything, make sure you guys follow my blog, moneywithcarter.com, talking about investing, money management, trading, stuff you guys would definitely benefit from. So now we're going to go ahead, turn to the computer, and look at the top 10 stocks that I personally want to buy in 2020. Some of these I did jump the gun a little early and buy some, but I have some good reasons why. So now roll the intro, let's jump into it. We'll see you at the computer. Let's go. Bam! Alrighty guys, so this is the full list of the top 10 stocks that I'm going to buy for 2020. So as you guys see, I break it down from high risk, medium risk, and then very, very low risk. So the very first one is Boeing. So this is ticker symbol BA. This is a very, very high risk stock. As you guys see, this stock was trading at $446, hitting those all-time highs, really finding some support at this 90 moving average line, and then this nasty fall. There's been a lot of issues with planes and plane manufacturing, and there's just a lot of uncertainty with this stock. So this is why I do consider this one a high risk, because if we go ahead and look at the news, you guys can see Boeing predicts an airline bankruptcy. There's a lot of volatility, and especially with all these airline stocks that have extreme volatility due to the virus, this is following in the same footsteps. So now the second one here, CCL, Carnival Cruise. You guys can see that this stock hit highs at $72. It used to pay a dividend. This stock it's like buying this stock in the 90s. I do own a couple shares of this, but the reason why I got into it is because I didn't want to miss out on a move, because the overall economy is starting to turn around, and this stock could definitely come around in the next couple of years. So this one is definitely more of a long-term high risk play. WYNN. So this is the Wynn Resorts. You guys can see that this stock does and it is coming in contact with recent support. And so I do think that this stock's going to be a stock that definitely has some room to grow, just because right now all these resorts, all these hotels are shut down. So I do think that this stock is going to be one of those stocks that, yeah, it may take a little bit of a couple of years, maybe a couple of months before we see some one of these stocks turn around. But you have to look at it. This stock's at $78. It really hit some sort of highs at $200 and then $250. So there's definitely a lot of room to grow. If let's say this stock even goes up to $100, then that's a $30 per share gain. But I do think that this stock is going to have some trouble breaking over this yellow line here. This is what you call a 200 moving average line. So as you guys see, that once this stock breaks above it, it uses it as some support. Once it breaks below it, then you guys can see, look how much trouble it had before we broke above it. Used that support, broke below it. You guys can see it had trouble breaking over it again. Boom. Trouble breaking over it again. It actually sold off a little bit and just kind of consolidated in here before it got tanked down. So I do think this stock definitely has some room to grow, but this is going to be a high risk, just because right now there's so much uncertainty with resorts, airlines, and cruise lines. So I do think that that is definitely long-term play. So now the medium risk are obviously stocks that are a little less risky. We know that they will eventually recover. Most of these have gone through some of, like the 2008 crash, and they came out of it pretty strong. So now the first one here in the medium risk is ticker symbol JPM. This is, JPM. This is JPMorgan Chase. You guys can see that this stock does have this beautiful uptrend, and really it's just been kind of getting slammed back down lately, just because a lot of banks right now are finding themselves in a lot of uncertainty. There's a lot of people that aren't going out and getting home loans. There's people that aren't going out and getting auto loans, and really the last thing people want to do right now is take out extra loans and stuff like that, because unemployment's record highs since like the Great Depression. A lot of uncertainty, but this is going to be a stock that we've seen. We've seen it through 2008. We've seen it through other, economic volatility times. So this is going to be a stock that does come out on top. They do pay a nice dividend. And so I do think that there's a lot of future for this. So the next one here is ticker symbol TWTR. This is Twitter. So I'm sure you guys all know Twitter. This stock's currently trading at $29. And the thing about this is, do you guys see how really the whole economy has just been getting slammed lately? And this stock really, hasn't been doing too much. It's really found some support or some resistance at 54, some support at 13, and there's some nice support here at 22 right here. It's come in contact with it here, and here. So I can see why it bounced with ease. So really what I'm waiting for is a break of this 200 moving average line and a break of these moving average lines. The reason why is because these are going to be resistance lines. So once this stock breaks above it, just like it's done in here, we're going to see the stock come back in contact with it and then use it as support. So now every time that this stock is above it, look, it's using it as support and it's slowly growing up. So now we're waiting for it to break above it. That's going to be our best entry. The reason why is because we don't want to have this stock, we're looking at it and saying, oh, okay, this is a great buy right here at 36, and then have it continue to sell off. We want some confirmation that the stock's going to break above that. That's why I'm waiting for that one. So now the third one here on the medium risk is Costco. Ticker symbol COST. So we all know Costco. Costco has really been in some volatility. You guys can see that, it really hasn't gotten hit too hard. There was an excellent buy all the way down here at 280. I did miss out on that opportunity, but that still doesn't mean that there is no opportunity with Costco. Costco's been known for paying great dividend. They've been known for doing great work. They've been known for not being greedy. All the executives have a reasonable salary and they don't get paid millions and millions of dollars. So that's one of the things I do like about Costco. Not to mention sometimes they do pay that special dividend of like $5 to $7 per share. So now you guys can see that this stock does have resistance here at 325, and it's right now trading at $300. So do I think it's a fair buy? I think it's a fair buy. I really do. I think getting in at $300, the thing about Costco is it doesn't move a whole lot. This stock right here hit resistance, and this was one of the largest moves Costco has seen. And the reason why is because the whole economy was getting hit that hard. And then people realized, well, Costco is actually still profitable. Costco's, they haven't closed all their locations, so there's still a lot of room with this one. This is going to be a play that I do plan on purchasing pretty soon here. So now let's go on to the low risk. These are going to be stocks that have low risk and very, very high reward over the next 5 to 10 years. So the first one here is Amazon. AMZN, I believe, is the ticker. There it is. So this stock is trading at you guys can see that this stock is trading at a very, very expensive value, but just because it's expensive does not mean that there is no room to grow with this one. This stock is $2,356.95. So do I think that this stock's overvalued? Maybe a little bit right now. Looking at it at the RSI, it does say that there is some sort of downside potential. I would like to pick this stock up. Honestly, if I could get it for $2,000 flat, I will go ahead and make the purchase. But the thing about this one is I know this one's going to be a stock that definitely, doesn't go anywhere. People right now are still buying things on Amazon. People are still streaming things on Prime Video. People still have the, Alexas. People still have, Amazon Music. And not to mention, they're one of the largest companies in the world. The reason why I haven't bought one yet is because, guess what? They don't pay a dividend. So once they do that, hopefully they will split soon and make that stock price a little more affordable for a lot of people. But realistically, they don't need to because a lot of people aren't afraid to go out and spend some money on them. So now let's talk about another low risk here. This is Walmart. Ticker symbol WMT. I did purchase this stock for $123. The reason why it's really moving on these moving average lines, they haven't closed any stores. They pay a dividend. I'm not worried about this one in the future. Realistically, is Walmart going to ever close? I can see it long term, but for the next 5 or 10 years, they're going to grow. They're going to get bigger, and I'm sure they're going to change some stuff. And but overall, the biggest thing with them is they do have labor battles with their employees because people don't think they're getting paid enough. There's been a lot of issue that the owners are pretty greedy, but you know, they do make money for us, you know, in the stock market, so we can't complain. So now the third and final low risk, I just have index funds. So these, I feel like right now they're very, very affordable. So if we go ahead and go on, you know, VU, which is an ETF or an indexed fund, you guys can see $263. You guys can see I've been in and out of this stock quite often, but you guys can see I have been buying a couple of them lately. So you guys can see that this stock right now is slowly climbing up on the V pattern, which is pretty nice. Let's go ahead and get rid of these trade things. So now you guys can see it's just forming this perfect V pattern. It really is just consolidating as well. I could honestly see the stock dipping back down. You know, once people, there's been a lot of issues with the overall, you know, economy and the Fed, but if you go ahead, buy it, don't look at it for a couple of years, you guys are going to be fine. There's a lot of very affordable ETFs and a lot of affordable index funds. You know, I like VU. They pay a dividend. They're a strong company, or not strong company. Yeah, Vanguard is a strong company. I'm getting it all mixed up. But there's a ton of other ones. You know, these are the dividend ETFs that are very good. You guys can see this one. This is Vanguard's high dividend ETF. So this stock's $75, or this ETF is $75. But you get paid a dividend, you're going to be getting the growth of this. And this is going to average anywhere from 8 to 12% per year over the past 50 years. That's what this is averaged. So just go ahead, buy a couple of these. You guys will not regret it. So those are the top 10 stocks that I am going to buy in 2020. I hope you guys enjoyed it, and overall, I hope you guys learned something. And if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, stay safe out there. I don't want to hear that you guys have gotten sick. So now roll the outro. We'll see you tomorrow. Take care. Bam.